Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Certainly been some pretty good news on the inflation front in the recent sort of data, and that was sort of reaffirmed by comments by Fed Chair Jay Powell coming out and saying that the Fed necessarily doesn't have to see inflation down to 2% before it starts cutting interest rates. So that's given the market a pretty big boost. Also, as well, comments coming out from ex-President Trump, obviously the Republican nominee now for the presidential election in November. I mean, he's come out and said that he wouldn't necessarily get rid of Jay Powell and let him see out his term if Trump was elected. So providing Trump is good to his word, Jay Powell will then be a Fed chair until 2026. Now on the earnings front as well, it's a little bit sort of mixed, but on the whole, it's sort of encouraging news out there. And what we have started to see now is a big sort of rotation out of the big tech stocks into the broader market. And that's seen the Dow put on nearly 1,000 points in the last couple of days, and with the Nasdaq falling around sort of 3%. Now, with those comments coming out of Jay Powell as well, obviously interest rates have fallen in the US. 10 years around 4.15 and the 2 years around 4.42. That's obviously a pretty big move because if you look, sort of 4 to 6 weeks ago, 10-year was trading above 4.50 and the 2 year was above 5%. Now, obviously, on the political front, the big news was the attempted assassination of ex-President Trump at the one of his rallies. Sort of grazed his ear. And that was just a couple of days before the Republican convention in Milwaukee. Now, Trump has also announced his VP running mate, and that's J.D. Vance, which is quite an interesting choice, really, because 8 years ago, he was one of Trump's fiercest critics. Now, if Trump does win the election, it would be pretty interesting to see what happens because, he is clearly sort of, tariff based and, really just trying to get sort of production and industrial production back into the US, which potentially could be pretty disruptive for global trade. Also, as well, it'll be very interesting to see what happens with the Russian-Ukraine war because, potentially a lot of that sort of financial aid to Ukraine would then be cut off. As that conflict drags into over 850 days now. Now, oil's backed off now. It's just above 80 bucks, currently around 80.30 and change. Now in the UK with the new Labour government, they just had the sort of King's speech, which sort of outlines the government sort of policies for the next sort of year. And again, sort of pretty encouraging. They've also received a little bit of a boost from the IMF, which has upped its growth for the UK to plus 0.7, plus 0.5. Again, not a huge increase, but again, moving in the right direction. And with inflation well under control, it looks like the Bank of England will be cutting interest rates maybe as soon as August. Now in the EU, still no government in France yet, just trying to sort of come to terms with that sort of pretty historic vote, which managed to block the far right. But now they've got to try and come up with some sort of coalition that can rule the country. But certainly the French economy, we're looking for a little bit of a boost from the Olympics, which start in just over a week. But just on the US election, I mean, if Trump does get elected, J.D. Vance has been pretty negative on Europe, and that will be interesting to see how that sort of plays through. Now in Australia, given the rhetoric coming out of other central banks, it'll just be interesting to see the tone of the Australian Reserve Bank at its next meeting. Because potentially that sort of last inflation print was a little bit on the high side, came in at 4% from 3.6 in the previous. But again, if you're starting to see global interest rates starting to be cut and sort of reduced, then potentially, where have we seen the high in Australian rates? Cash rate is currently 4.35%. Now, Chinese growth came in a little bit weaker than expected at 4.7% on an annualized basis. That was down from 5.1%. But obviously a big sort of policy meeting in China this week, and it'll just be interesting to see what sort of potential policy changes come out to try and boost the economy. And if they did, that would then potentially be positive for the Australian economy. Now here in New Zealand, the big news was the latest CPI reading. That came in at 3.3%. That's the lowest level for 3 years. And given that and the sort of potential pivot from the Reserve Bank at its last meeting, are we now looking at an interest rate cut here in New Zealand, potentially as early as August, but most economists now are looking at October, and potentially another one in November, because certainly the economy, really is pretty sluggish and needs a bit of a boost out there. Given the very steep rise in interest rates from 0.25 to 5.5 pretty much at every single meeting. And again, some of the banks have started to jump on board. Westpac cut its mortgage rates last week. ANZ have cut them this week. And at 3.3%, that's just above the sort of target range of 1 to 3% from the Reserve Bank. So that's certainly, good news out there, and potentially we're looking at interest rate cuts now in the very near future, because certainly the economy needs it. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.